I mean, I would tend to agree. The key risk, which is the pandemic, is still out there. Even though we've passed the event risk of the US election, the point is that cases are rising. And even though the vaccine is phenomenally good news, I mean, the introduction of that vaccine doesn't stop the rise in cases and certainly won't prevent the second wave. So I think it's something that is going to have a bigger impact, perhaps 3 to 6 months down the line. But for now, I think markets are just really taking a bit of a step back. They had quite a significant rally, both post the US election and post the vaccine news.
How do you position in equities with this in mind then?
So we have generally a healthy allocation to equities across our multi-asset portfolios at State Street Global Advisors. And we have a very good market regime indicator, which looks at implied volatility levels across different asset classes. And that is indicating us towards a fairly favorable allocation to growth assets. I think it is important within your growth assets, which is typically equity, is to be very well diversified. So you can see that particularly over the last week, where initially post the US election, you had a big run up in tech stocks, and then you've had quite some regional and sector rotation as the vaccine news has hit. So that really illustrates the benefits of having a diversified equity portfolio. And there are different strategies that you can consider, different regions that you might want exposure to that could really help offset the kind of rotational changes and the volatility that we continue to expect to see in markets.
So have you been ditching tech then and favouring growth in the last few weeks? And you mentioned geographical locations. Which specifically when it comes to the growth story?
So I think we have actually had a fairly persistent overweight to US equities. Despite the high valuations, your earnings profile and your sales are still coming through. So there is a good fundamental story to owning US equities. We very recently pared that back somewhat and increased our allocation to Asia Pacific equities. And you can see the regional rotation. Asia Pacific over the last 2 weeks, MSCI Asia Pacific has been up just under 7%. MSCI Europe has been just under 15% in the last 2 weeks. So Asia Pacific, I think, has attractive valuations, but the momentum there is improving. And I do think there's this additional factor of how well a region has managed the pandemic, which is going to start featuring as to how we do asset allocation.